And so I said, we just can't, I said, it's a little more difficult. We're not really in a buyer's market. We're not in a seller's market. And I said, that's why, somebody's house sold and yours is still sitting here. So it feels a little wobbly right now.
I think wobbly is a really good word for it too, right? Because I think it might be down into micro sections of the valley even,
You can totally go.
um, versus a bigger, broader, like the pendulum is swinging. Maybe that's why I can't define it. I think it is a little bit maybe geographic centric in different pockets and or price point differences. Um, what are you guys seeing in terms of market movement at the bottom of the market? What do you consider the bottom of the market to be? Let's ask that.
Hey Kim, I think that you're right as far like it feels like I've been doing this for 30 years and it feels more like this than any other time that it's just neighborhoods. Like I have
Yeah.
some listings, I'm getting multiple offers that I thought was like priced pretty well, but we got multiple offers, and I have some that I thought were priced great and we're getting no showings. It's really weird as far as that goes. Like it's kind of neighborhood by neighborhood for me. That's what I'm seeing. And I kind of feel like the low end of the market is for me, it's been picking back up. The really high end is really strong, and it's that kind of in the middle that 600 to 800,000 is where it seems like it's really tough.
The squeeze. Yeah, it's interesting. It's really interesting too to think about, I think there was so much anticipation and hesitancy both at the same time in our market for the last quarter, maybe the last half of 2024. And so I think some of that is easing a little bit, which might be why we're seeing that influx on the bottom and maybe even on the top, right? People are a little more optimistic, or at least they feel like they know something and they can figure out what their life should look like. Even if they don't like it, they at least can have kind of a reconciliation of what things could be. I'm interested about the middle because that's kind of how I have observed is that middle section. And there's some really, I think people are stuck on it's a $600,000 home. And a few years ago, that same home was 350 to 400. And so I think people are having a hard time like going, oh, I can't believe it's changed that much. And yet it continues to change. The longer they wait, the wider that span, as far as I'm concerned. So I think it's going to be interesting to watch, but I definitely feel like there's a movement in the market again. And so I think when we're looking at like who moved my cheese, if you've never read it, I would encourage you to read it. If you have read it, I would encourage you to reread it, because I think it's just going to help trigger some things in your mind to allow you to make some pivots and some shifts that you might not even be aware that you're resisting. And I'll just speak from personal experience. I think I do change really well. I think I look forward to change. I think I get excited about change. And even so, when I was reading this, I was like, oh, ow. I mean, I felt like I got poked with a few pins in this one. So I would just encourage you guys to spend some time. It's not a very long read. I mean, for Pete's sake, it's big writing and there's lots of pictures, right? So like you can pull this off. It is not, I don't even know how many pages it is, probably less than 100. Yeah, 94 pages from beginning to end. And a third of those are pictures. So come on. Anyway, so I just encourage you to do that. I want to just jump in because I've asked Michael Velasco to come and speak with us the next couple of weeks. And I have an apology, a public apology to you to share, because in my conversation with him, I told him, listen, I need you. He's a great CPA. He has, first of all, he owns Exchangeable. We'll talk about that for a second. You might know about that. If you do 1031 exchanges, or you want to learn about them, or you want to be able to advise your clients on them, Michael is 100% your go-to guy to learn this. He's a very good teacher, which you will learn in just a few minutes, but he's very good at taking something complex and breaking it down to the easy. And even with that being said, I know that the majority of agents do not track their numbers. Majority of agents don't have a business bank account even. Majority of agents are not an LLC or a PLLC. Because of that, the majority of agents aren't getting paid through their corporation. Because of that, they're paying way too many taxes. Because of that, they are woefully ignorant of like the benefits of these things, because they just sound too complicated. So I know all of those things to be true. Probably no one in this room, but I know that to be true for the majority of agents, right? So when I asked Michael, I said, listen, here's what I need. I need you to dummy this down into an Excel spreadsheet where people could just like at a glance throw in their expenses, throw in their income, and just kind of see. Like, we just need very high level, not down in the dirt, not categories, none of this stuff. And because I go, I think maybe that we could entice them to utilize this. And if we do that, then we could go to the next step. And he pushed back, and not just like, I mean, he was very respectful, but he was very forceful. He's like, I can't do it. I just can't do that because I can't set them up to fail. If they won't take this part seriously, then they're never going to take the next step seriously. And so I was reprimanded kindly, and he actually hit me because it's how I believe too. I just was willing to like be in a state of desperation. Like, well, I wanted to do something. And he's like, well, then let's just have them do it right. And if they're not going to do it right, then that's on them. And I believe that to be true also. So after we thought about it, I was like, okay, so let's do it this way. It might take more than one session for us to get down into the nitty gritty. So we are recording this so that you can go back and listen to it again as you sit and learn from him today. I'm going to encourage you to jump back into the Facebook page and pull the recording so that you can hear as you actually do the work. So I'm going to encourage you to take notes. I'm going to encourage you to ask questions, and then I'm going to encourage you to, lather, rinse, and repeat. Do it again and again, because the beauty of what he's going to teach you is actually for the benefit of you and your family. This isn't some protocol that's a rigorous thing that you have to just try to fit yourself into so you can say, I have a business. It's not that. It is that also. But it is so that you are preparing and protecting your finances and your future business and your family. And so that's the heart of why we're taking these next couple of weeks to hammer this stuff out. So, Michael, thank you very much for not being afraid to just, arm wrestle with me a little bit. I appreciate that. That's good for me. And I think in the end, it will be good for all of us. So I'm just going to pass it to you and let you roll. You're free to share.
I can share my screen. Great.
Absolutely.
Let me see if I can get this going here. Cool. Let's see if this. Okay, everybody see the screen?
Yep.
Yeah, awesome. Everybody hear me okay?
Yep.
Yeah, great. Terrific. So, Kimberly, thank you so much for having me today. You're not the first arm wrestling match I've had with this particular issue with real estate agents over the years. And I think for context, I think I should just kind of walk you guys through. Let me see if I can get this to work here. Hold on 1 second. It's giving me the screen, but it's not letting me. Hold on 1 sec. It's been a while since I gave a Zoom class. Let's see here. Let's see. This one I want to take over here. There we go. And why is that not doing that? Let's see here.
In a way, it makes my heart happy that it's not just me who fights this Zoom screen share.
Yeah, it won't let me. Okay, so be patient with me for a second, guys. Let's see.
Are you in Canva? What are you presenting from?
I'm in PowerPoint here. So let's see here. Okay. Boom. So I think I've got it.
Okay,
so,
good.
I think for context, I want to just introduce myself in a way that's not bragging anyways. I just want to tell you a little bit about what I've been through over the last 21 years in my businesses and my real estate career as well. And then I'll tell you kind of what's really happened to me. I'll point out the highlights and the lowlights. So I've been in the real estate and tax space for 21 years. I've closed roughly 2,500 transactions during that time. As a broker, as an REO agent, as a short sale agent, kind of went through all of that. I'm hearing some of the years, like Will's been in the business. I'm like, yeah, we've kind of seen all that. The ups and downs of the markets over the last 25 years. I've been a 3-time brokerage owner, some mildly successful, some not so much. Also an associate broker. I was a designated broker for a number of years, helping agents and auditing files. one of the real kind of forks in the road for me was when I decided to start doing some other businesses. I started an accounting firm in late 2018 and did that for about 5 years. I had 3 CPAs on staff. I built it to, I think, 350 tax clients, 150 bookkeeping clients. And in that time, I learned a heck of a lot about tax, both teaching my CPAs and my CPAs teaching me. I'm not a CPA, by the way. I just own the firm. It's kind of like you can own a real estate broker.
Okay, I'll take it back.
But it's okay. I could probably get through the passing the class, but I am not. But I did teach CPAs, and I teach CPAs how to do 1031 exchanges as well. So I have a pretty extensive tax background and like an entity structure background. I'm also a hard money lender. So with the money I've made over the years, I do hard money lending, first deed position, pretty much only. And just got my Veritas Funding Group license to broker hard money loans. That kind of developed out of the Hard Money Institute, where I created a platform for teaching people how to hard money lend. And in that platform, I started having high net worth people come to me and they go, well, we just want you to broker the loans for us. And I'm like, I'll teach you to do it. I don't want to broker it. And it got to a point where I had a massive family office go, you need to lend our money for us. And so I finally said, forget it. I'm just getting licensed, and I'll do that on the side where I can do 3 to 4 of those hard money loans, a month, make a little bit of money on the side and still do that. So I have a pretty extensive background on first deed position, notes, promissory notes, personal guarantees. From state to state, I lend in 4 different states, and so really comfortable, and I know that really, really well. What I do really well, what I do the most of, is being the owner of Exchangeable, a qualified intermediary, and a certified exchange specialist. There's only about 100 of us in the country that have that designation. It's kind of like a CPA for an accountant, passing a really difficult test, and so I spend a lot of my times with clients working on complex reverse exchanges, improvement exchanges, and of course regular forward exchanges all over the country, from New York to Hawaii and everything in between. And so I spend the most amount of my time, about 40 hours a week, on that business, and really working with real estate agents, tax attorneys, CPAs, and commercial real estate agents, et cetera, title companies. So I spend most of my time doing that. I have a real estate school as well, but I didn't put that on the resume, but I teach this. I teach 1031s. Really, the reason for having that real estate school is to teach 1031 exchanges to real estate agents. So that's a little bit about me, but I think more importantly are my failures. And some of my big failures came in my late 20s. I'll be 50 this September, but in my late 20s, I was a brand new real estate agent. Like many of us in our 20s, we think we know everything. I was super aggressive. I grew up dirt poor, and I think that's kind of where this motivation to become wildly successful financially. My mother raised 3 children, and she was a janitor in a small mining town. And so I got out of there and I said, I'm going to be a millionaire. But I didn't really have any of the tools to really manage money. I've never really had somebody in my family that really could handle money and could teach me. And so along the way, here I am, a young, aggressive real estate agent, and spending more than I probably should have in a top-heavy market and a balloon market that was about to pop. And there I was in 2008, 2009. Basically lost everything. I was negative $300,000 in net worth. I owed the IRS $100,000 in back taxes. And I remember, as one of my 4 homes was sitting in foreclosure, sitting at the bottom of the stairs, crying that I'd really messed up my entire life. But I had, God was really showing me a lot of different things in those times. And what he was showing me was, like, this is not a good way to run your life. And run your finances. I didn't have bookkeeping. I didn't have a tax plan. 1 year, and some of you may be able to relate to this, but 1 year of taxes, you owe 30 grand. So you file an extension, and then you get on a payment plan. And then the next year comes and you're on a payment plan, you get another $30,000 tax bill. and then so on and so forth. And then the IRS doesn't allow you to do a payment plan over $50,000 when you owe more than $50,000. So I learned a lot about the IRS back then. And so what I did was just put together a plan. I went through Dave Ramsey's, Financial Peace University. And then eventually one day I started actually teaching that at my church, which was kind of a cool thing. But I just learned a lot about money and how we track money, how we track our business, and really the health of a real estate agent. You guys get into this business because of freedom. And most of you did this. You got into this business for financial freedom, for your freedom to make as much money as you could, and for your freedom with your time and family. And then ultimately, hopefully the financial reward that comes with our hard work, and I think that can kind of become a nightmare if we're not careful. This dream of freedom, if we don't manage it correctly, can be a really, really bad thing to get involved with. So Susie Arman says a big part of financial freedom is having our heart and mind free from worry about the what ifs of life. And so thankfully I'm in a place now I don't have to worry about the what ifs. Changing my tires on my car is not a life-changing event. Your car breaking down and needing a new engine is not a life-changing event. And some of those things, as you develop your financial freedom, those problems that were really life-changing events no longer become life-changing events. They just become part of life. But we need a budget for these types of things. So let's talk a little bit about understanding the business finances within your guys's real estate businesses. And I got to also applaud you guys, because you guys as real estate agents are the finance department, the marketing department, the servicing department, accounts payable department, accounts receivable department. You guys do it all. And when you guys are doing it all, sometimes, the finance piece, the accounting piece of your business is the first to kind of go away. Also, the IRS's payments are also the first to go away a lot of times. So what I want to do is really talk about breaking apart your personal finances from your business finances. And some of you may have a PLLC and you guys are set up correctly, and you have a separate business account and you have bookkeeping and you have a great plan, a great tax plan. But I think for the overwhelming majority of real estate agents, to Kimberly's point, is we don't do that. And so the first thing I want to do is I want to break apart your guys's two accounts, from your personal account to your business account. And if you don't have a PLLC set up, I'd say let's just go ahead and get another checking account set up. And that checking account is going to sync to your accounting software. If you have a PLLC, we got to do this. If you already have one, let's go ahead and get a business account set up. We're going to talk about next week about the power of a PLLC and S corporation. We're going to talk a little bit more tax planning. I'll dive into hey, here's a way that you don't necessarily have to pay taxes too. So I'll kind of walk you through some cost segregation, and some S corp planning and some tax planning we'll talk about. But that's the first thing I want to do, is break apart those two. And then I want to do something called a pro forma. And for you guys, that's probably your goals for next year. And a pro forma, I remember the first time I heard the word, it was 2013 or 14 for me. And I was like, what's a pro forma? What is that? This really smart guy was talking, and I was like, I don't even know what that is. And so a pro forma is really a projection of what you're going to do with your business. And I'm going to give you an example. In about that time, I created one for real estate agents, which I'm happy to give you guys, the spreadsheet, which has got all the cells formulated, and I'll show you here in a second. And then I'm going to walk you through a little bit of a P&L, what a P&L will look like for you if you are using one of the softwares for measuring and tracking your income and expenses. And so I'll walk you through what a good P&L looks like. And so let's the other thing is, one of the pitfalls that we fall into as real estate agents is we go what is your profit this month? What were your expenses? And then we say, I think it was X amount. Well, how many you're spending money on Zillow ads? How many of those closings came from your Zillow spend? I think something. And so I want to get you guys out of the I think mode to I know. I know exactly where all 5 of those closings came from. One came from referral, one came from Zillow, one came from an open house, et cetera, and being able to track those. And there's a very strategic way you can do that, which I'll get into here in a minute for you guys. So softwares for bookkeeping. There are lots of different options. I am a QuickBooks advocate. I actually hired, my first hire was a gal that worked for QuickBooks Intuit for 10 years. And I brought her aboard to help with bookkeeping. I love QuickBooks. I think they have the best software, but they're also one of the more expensive ones. It'll run you $80 a month. There's some other ones I put up here on the screen that I don't have a ton of familiarity with, but also to let you know there's other options and some more inexpensive. And what these softwares will do will typically sync to your bank account. And so you can take your checking account. Remember, we're starting a new business checking account, or just a regular personal account, and we can sync it into these softwares. And so every transaction will be tracked inside the software. We can now create line items in our profit and loss based on the debit or the credit that comes in. Okay, so these are the different ones, and you've got QuickBooks. I've heard good things about Wave. I heard it's free, but I doubt free is really the thing, because a lot of times they'll get you in for free, and then they'll make you pay because there's limited services on it. So, but anyways, I like QuickBooks, and it syncs really well to the different bank accounts too. So
Ever heard of Hurdler?
I have not. What? Say that again, Cindy.
Have you heard of Hurdler?
No. Do you like it?
I absolutely love it, and it does everything QuickBooks does.
Awesome.
And my CPA has access to it. It's $100 a year, and it does everything QuickBooks.
Awesome. So I'm spending $80 a month per business on mine. So Cindy's got a great option for you guys if we are looking for an alternative to save money. So that's a good one. One more time, Cindy, what's the name of that?
Hurdler, Hurdlr.
Terrific. Thank you so much.
You're welcome.
Yeah, another one for you. So here's an example P&L for you. This is a year profit and loss, and your software, depending on which one you're using, they're all going to be pretty similar. And you're going to have a kind of a gross sales, which is really interesting, right? What is our gross number? What are we grossing in commissions? And then you're going to be able to track, okay, how much is my profit? The more you do yourself, the higher the profit's going to be. If you have to start hiring people to do the work, you get to a place in your business where you have a team, you have a transaction coordinator. Obviously, the profit margin will go down, but your sales revenue should go up based on how many agents you have working for you. But this will just kind of give you a line item of everything, every expense, and then you can get those as micro or as macro as you like them. So there could be accounting expenses. You could break that down to a bookkeeping expense and tax return expense. You could do those types of things in there. You've got here, you'll see line items for payroll wages. If you have an S corporation, you're going to be required to have a payroll for your S corporation. And the whole reason why, I'll get into this more next week, but the whole reason why we have an S corporation is to save on self-employment taxes. So a lot of people come aboard as a real estate agent and go, I want to make a ton of money, but they don't realize that their tax bracket is a lot higher because of self-employment taxes, which are like 15.3% self-employment taxes. And that goes up to $150,000 in income. You'll pay that, you'll pay 15%, and then you'll pay another 3% once you get past 140,000. And so that's the gotcha moment, because you're paying your normal IRS tax brackets for income, your state tax bracket for income, and then all of a sudden, boom, you get hit with 15%. And that's when people who make $100,000 in gross profit write a check to their IRS for $25,000 or $30,000 is because they don't understand the self-employment tax part. Where as a W-2 employee, you're working for somebody, they're paying half of that, and you're paying the other half, and it's withdrawn from your check, so you don't even know you're paying it. And so the P&L in this case will give you a kind of a line item number, and you'll know what your profit is each quarter. And then you guys can make your estimated quarterly tax payments. I have 5 different reports I run from my accountant every month. One will be a side-by-side, month to month, year over year. I'll take a look at that as well. And then of course the quarterly, so I know how much my taxes are going to be, and hopefully we don't have to pay a lot because we're doing smart things. And then of course your annual, and this annual one, once you take it, you'll certify it and do your tax returns off of this, depending on what you're filing, whether you're filing a Schedule C or a 1120S S corp return, or just a regular 1040 filing. So that's a little bit on what a profit and loss statement will look like. And the other thing that you can do as the year goes, what I really want you to do is have a pro forma that works alongside your profit and loss statement. So there's projected, right, when you have a company, and when you guys see this a lot when companies are public companies. I watch this a lot because there's different stock investments that I do, is like, did the company meet projections or did they exceed it? And of course the stock goes through the roof if they beat on projections. Well, the same thing in your business, you've got to project what you're going to do. I built this spreadsheet, and you guys can email me. I'll have my email address at the end of the presentation. You can email me for this, but I do a pro forma like this for everything I do in life. And so my 3 different businesses have a pro forma. Exchange was got a pro forma. My lending business has a pro forma. And then I have a personal pro forma with a personal budget. And so everything I do has a plan. And it doesn't necessarily mean I'm always going to make that plan and beat that plan or exceed that plan or even meet that plan, but I got a plan, right? And there's some factors that'll go into your plan. And one of them right now is our current market. You know, the current market is, I think, I've done this 21 years. This is by far the toughest market, you know, because of the fluidity in the market. Back in 08, at least we had short sales and foreclosures. We had fluidity, we had movement. Now this market is even tougher. So I think, you know, when you guys are doing your pro forma, you need to adjust accordingly for market conditions. In this case, I built, you know, you could see the line items along the left. The big box in red is the expenses. Up at the top, I have buyer closings, number of listings, and then the expected commission from each one. You know, and you could do that. My formula is built so it's an average purchase price of, you know, whatever the market, 450,000 in this case. This one's a little bit old, but you guys can adjust the formulas, you know, to an average $450,000, $500,000 purchase price, or whatever market you're in if you're in the luxury market. Buyer closings, listing closings. In this case, we had 20 of each on each side, and a $270,000 in total commission. All the expenses, a lot of expenses you guys don't think about, like your property signs and your Supra expenses, your brokerage transaction fees, your monthly fees, the website hosting for you guys, the budget for buying leads if you're going to do that. And then you'll ultimately get a net expense and then a net profit. In this case, we got an S corporation at the bottom, so there's some salary that comes out of that. But this is one of the most powerful tools you'll ever use, because you can actually line item every single dollar. And what I want you guys to do is go through your business bank account or your whatever you're using to track your expenses. And I want you to really add those up and figure out what those are, and then do the projection for the rest of this year. You can use this this spreadsheet, create your own. This one's great. It took me quite a while to actually perfect this, to really get it to speak the realtor language. Like I said, I'm happy to share it with you, but I would do that. I would project out what you're going to do for the rest of the year. And then as the profit and loss statements come in, you're able to compare the month to month on your expenses to what and your revenue, and go, my expenses were $2,000 higher than I projected. What am I not writing down? Where am I missing it? Right. And then we've got really 2 issues with on our personal side. Also, this applies to businesses too, because ultimately what your profit is here feeds your family, and then you can pay your personal expenses off. But we really got to decide what the issue is. Is the issue with my expenses as far as the profit goes, or is it am I not closing enough sales? And those are 2 different issues. So when we go, oh, I need more income, that's when Kimberly really comes into play and goes, hey, what is it about your business that's causing not enough transactions to close? And what are that daily activities I got to do each day to make sure that my closings are where we are? And that's a whole separate pro forma, right? Is how do we get these closings? What is my cost per lead? How much am I spending? What are the activities daily? Is it open houses? Is it buying leads? Is it your CRM? Whatever that plan is separate from what's here. That's a whole different plan. And so you have to adjust that plan. So do we have to raise income? Do we have to lower expenses? Same thing with your personal budget, because you're going to have a personal pro forma that looks just like this. And I have a 5-year projection of what I'm going to do each year for the next 5 years, what my net worth is now, what my net worth needs to be in 5 years. I already have it planned out. I already have the next 5 years planned out, exactly what I want to do. And so I would encourage you guys, and that's not to brag, that's just to say I've got a plan, and
So,
nothing's
Michael,
going to stop me.
I
Yeah.
want to interrupt you. Can you unshare the screen for just a second?
Mhm.
So we can go back to people's faces for a second,
Sure.
because this is wonderful and I don't want it to be missed, but I want to make sure that people haven't glossed over, because if you are really good in sales, it is likely that this stuff is not like ringing any bells for you and you're foggy and you don't get it. And so I want to slow down for just a
Yeah.
second,
Sure.
because I think this is super important. So let's just take a breath for a second. How many of you, let's get gritty for a second. How many of you have a separate bank account and personal account? Because I'm going to guess the majority of you do, right? Okay. How many of you have an LLC or PLLC? Majority of you do, by raised hands. Okay. So how many of you could see that this pro forma looks like that other 6-letter word that nobody likes either, called budget? Right? Do you see? So we're using some terms, but I just want to make sure you're looking at this stuff and you can say, okay, well, wait a minute. I can see that this is not this out of reach, because it starts to look busy and like, okay, now I'm overwhelmed and now I just shut off, because in my own limiting belief, I say, I'm not an accountant. I don't get this stuff. I don't understand. So I want to just kind of clear the fog for a second, because what Michael is sharing here is literally super duper basic. It looks complicated because you're looking at this screen and you're like, holy moly, this can't be right. Right. So I just want to go backwards for a second and just help you take a breath. Because if you're overwhelmed about this, I don't want you to shut off the rest of it. Just look at it and say, listen, the pro forma is a budget. What is a budget? It's a list of what your expenses either anticipated, like what you're expecting them to be, and then there's a picture of reality. That's all this is. And the truth of the matter is your bank statements look like this also. So you shouldn't be any more intimidated by what Michael's sharing than what you see when you get your statement either via a digital device or you get it in the mail. So, and if you don't ever look at them, we are going to help change your life, because we need for you to do this, because it goes back to what Michael was talking about at the beginning in terms of freedom. You feel like you're in bondage and this is all overwhelming because you don't understand it and it scares you and you don't like the numbers. But the truth of the matter is, if you understood the numbers, then you understand, oh, this is not so far out of reach. And so I'm going to go backwards in Michael's story a little bit. Michael, you talked about you went completely bankrupt and had to start again. So how hard was it personally and emotionally to put together your first pro forma?
Well, I think when you're in that state, you are like in the head in the sand. You don't want to deal with, you don't actually want to deal with it.
Right.
So when I first, I had a really great mentor, Brett Tanner, who I think a lot of us may know. He was a great mentor to me. And, I think the first thing you got to do is figure out where you are. Like how bad of a problem is this? And maybe you don't have a problem. Maybe you're just not keeping track of it. But I think it's appropriate to go, how much money's coming in? How much are we spending? And this is in your business. And then you do the same thing with your personal. But let's first understand it. Where are we? And once you understand where you are, then you can start to build what you want your life and your business to look like. And so, you know, being in that space, if I could take my mind back to where I was, it was chaos. That's where I felt like it was just a lot
I
of
mean, how
chaos.
much shame you felt around not doing this the first way?
Well, I was really, I would present to the world the Michael Velasco that I guess I wanted them or thought that they should believe I was. But in reality, I was a fraud. And I
Yeah.
was a fraud because I was putting this facade on, this veneer on that everything was great and terrific. But in reality, I'm like, both my finances and inside of me was like dying because I was, it was such a failure at this stuff. And so,
I'm not trying to publicly shame you, but I thank you for that,
no,
because I
no,
feel like we have this, I don't know, expectation that everybody else is doing it right but me, and I can't
yeah,
possibly confess that I don't have this figured out. And I mean, there's more than one of us has been down to our last penny more than once in our life. That, like, that's just the way it goes, right? Like,
yeah.
I think everybody's got a story, right? And so there is a way of digging out, but I want to encourage people, even if you're not in, like, your finances are not all sideways, get it together so that you can have that freedom and comfort of going, oh, I'm actually operating in the know of my own life, and I'm taking control of this. Because we tell ourselves that everybody else is doing it and we're the only ones, and so we isolate and we don't confess, and what's worse is we don't ask for help. And so that's the point of today and next week and our time together is, listen, man, put it aside, because what we're trying to do is give you the freedom to know that you're an entrepreneur. We do From Agent to Entrepreneur, right? Lions and Legends is an extension of that intentionally, so that we're helping people really operate as business people. And so if you're overwhelmed by all the colors on his spreadsheet, if you're just the word spreadsheet overwhelms you, right? Just take a breath and just go, okay, wait a minute. We want to translate this for you so that we're all on the same page. I'm taking scads of notes. I have a bookkeeper. I have a PLLC. But you know what? I want to know more of this. I want to dig deeper so that I pay better attention about some other things. And so I can help other people. So if nothing else, just kind of look at it like this, take the information in. So I just wanted to take a pause. You were on a really good stride, so I didn't really want to interrupt, but I wanted to slow down
no, thank
people's
you, Kimberly.
brains catch up.
Yeah, I'll get off the rail. Like I'll just keep going like a steam engine. So I appreciate that. The other thing that I saw being an accounting firm owner and seeing all the books of these, and I had a lot of agents, I had a lot of other businesses as well, but I had probably 50% of my my client base was real estate agents, and I saw a direct correlation between the success of the agent and their commitment to these principles. There was
Yep.
a direct correlation. The ones that did it the best, and some of them just said, take care of it. And you guys may be one of those people that go, hey, let the CPA or the bookkeeper take care of charting this. When you're new, or maybe you don't have as much closings, you don't have the funds to do that, and that's okay. Then you probably do have time. And so I think we trade time for money. And in my case, I don't do my own bookkeeping. I let my accounting firm do all of that. So if you're one of those people, then you just got to go, okay, I'm going to go ahead and learn this stuff and start tracking it once a month. Just go in and fix your expenses and track each one into each of the line items. You're going to go ahead and do that and learn that until you get to a point in your business where that $200 a month you're spending on bookkeeping, and that's kind of the starting market right now for bookkeeping is $200 monthly. Is once you hand that off, when that time becomes more valuable to you, if you're a $500 an hour person, is you need to hand off the $200 an hour stuff. And so that's what I'll encourage you guys as you guys start to learn this and stuff. But I learned it myself in in many ways, like I really unpacked the S corporation. I'm going, I had an accountant explain it to me, but I didn't really know it. So I learned a little bit more about it, and I got really good, and then I was able to teach other people it. But let me go back here.
Bounce back in, and while you bounce back in, I'm going to throw it really quick to Steve, because Steve, to speak to something that Michael just talked about, there's a direct correlation between getting all of the numbers right and having that piece move with the growth of your business. How has that been true for you in your business?
Well, the numbers tell a story. I mean, that's, I've got a full-time CFO in my company, and Tammy says the numbers always tell the story. So, it helps you understand where things come from, and it helps you make good decisions moving forward in your business, because you can be doing some sort of form of marketing that, if you're not tracking what it's doing in the money, you're just throwing money out the door to something that doesn't work.
Yeah.
Let's talk about that for a second, Steve. How are you tracking for agents that in a marketing program? Are you using a designated call fire number for each of the marketing pieces that you're doing, or how do you track that particular?
I'm not that good, Mike. I'm not that good, Mike, at those types of tracking. My tracking actually comes from, I think, more so of tracking where the income comes from. So I know what's important. See, most of us take commission income, and it's just commission income as a line item. But the commission income should be broke down into, well, how much referral income did I generate this year? How much flip income did I generate? So mine's broken out in referrals incoming and outgoing. It's broken down into sections of the state where I work. So I know if I'm getting business in Northern Arizona or Munns Park, and whether or not it's traditional business. So if it's something we're putting on the market for a client, or it's inventory, something we own. So at the end of the year, I can track all of that income, and then I can look at my P&L and look at the expenses and see which expenses are tracking towards that income.
Awesome stuff. Good. Thanks, Steve. So budgeting and expense management, just obviously creating, tracking, and then cutting where necessary. And Steve's kind of talking about that too. It's like, where should we cut? What's working, what's not working, and be able to identify that and then move quickly. And if you're only doing tax returns at the end of the year, it's hard to really keep track of that. So you need to do it monthly as you evaluate. And so when I get a profit and loss statement for the month, I'm looking at all the expenses lines, and I'm going, where's this revenue coming from? What's really working? Like in my 1031 business, my Google click ads, it was costing like $1,500 a client. And I have some other kind of belly to belly. I do a lot of around the country. I do a lot of events where like Texas Land Title Association's one. I'll just get in the room and hang out with them. Well, I come to find out I could do all those events and get referrals from those types of events, and it cost me $500 a lead. Well, why in the world would I spend $1,500 on Google to get a lead, to get a closing, a 1031 closing? But I wouldn't have known that if I wasn't actually tracking those expenses and going, hey, what in the world am I doing? That doesn't make zero sense. And so I'll do that monthly. I'll just be like, what in the world am I doing? So it's important to make decisions, cut where needed. Income management, we'll talk a little bit more about taxes next week because it is the space that you guys are in. And what I think is coming back with the administration in regards to bonus depreciation, some of the cost segregation tools, which Steve is really familiar with. His team, they do a great job with some of those things, but really understanding how you can take those assets and write them off against your income because you're a designated real estate professional. You're in a great field and a lane. So we'll talk about that. And then planning for fluctuating income. As a real estate agent, we might have 5 closings in 1 month and we make 40 grand. And I've seen this, and then we spend 40 grand worth of income. And then we get ourselves into a bit of a trouble. So just making sure we're planning for the fluctuating income, Just because you have a bang up month doesn't mean you're going to have that every month, and being able to plan for that. And then, you know, managing your savings, your 6 months of emergency expenses, I think is a good rule of thumb. I think Ramsey does a really good job with this. Like, you should have cash in the bank for 6 months of emergency income if you guys don't have a closing for a few months. So I think that's a good rule of thumb. I usually always keep at least that now, and in my I keep some pretty high liquidity for a variety of different reasons. Like, my expenses on the exchange company can go up to 30, sometimes $40,000 in 1 month, and so I've got to keep a lot of liquidity if I don't, you know, if I get caught behind the 8 ball with closings. So, let's see here. I think the other thing to take away from, and I'll get into more tax planning next time, but I think it's really important that you guys make estimated quarterly tax payments. And 95% of real estate agents don't do it. And I think it's a really good habit to get into. At the end of the quarter, you guys sit down and go, what's my profit? Work with your CPA or your tax advisor and go, what check do I need to cut? And then at the end of the year, we're not scrambling for, you know, cutting a huge check to the IRS as it goes. So that's a little bit on tax deduction. We'll get, like I said, we'll get into it next week. Investing in your business, we kind of got into this, but making sure that we understand what marketing is working. I'm kind of the old school. I think referrals are the best thing to do, and work your referral. You know, I used to work with Lizzie Hofer. I don't know if any of you guys know who that is, but she made an empire on giving away cupcakes for people's birthday. Like, I asked her one day, I said, of all the stuff you do, and she does a lot of spending. I said, what is your best return on investment? She goes, cupcakes. I said, cupcakes are the key to success. She goes, yeah. And it's funny, I do that now in my business today, is just making sure you know exactly what's the best return on an investment. And I do that. I'll tell you, I do that in around Arizona. I took her idea and I just go, every time I have a closing, I go to a title company. And like, I had a closing with Navi and with Pioneer last week, went out, picked up cupcakes, dropped them off, made sure they knew who I was. So that, and I have some strategy there. Those are 2 title companies that don't own their own 1031 exchange companies. And I strategically put those, and I go, hey, just so you know, I'm here. Thank you so much for the closing, and boom. And that cost me time, which is expensive. But it's a belly to belly business in many aspects, as you guys know. So you got to go out there and do those things. And so I'm evaluating those things. How much time is it taking me? Is it important that I see them in person? In this case, I do. And what's the cost of $26 in cupcakes? And boom, I got a referral off one of those last week. So just being able to evaluate and make make smart decisions on your marketing. So
Michael, on that,
the emergency fund. I'm sorry, go ahead.
On your closing, you went to the closing. So are you talking about you went to a closing for someone that used your 1031 exchange company?
Yeah. So if I work with a title company, I go to the title company. I go to the escrow officers. Remember, I'm interested in channel accounts, right?
Sure.
I'm interested in the title companies refer me business, so I'm interested in the relationship with the title companies. So the escrow officers, yeah, that are on there. So that's something I put into my business. And when I'm out of state, I do the same stuff too. I'm in Texas quite a bit. I'm trying to work that market, but I intentionally go, and because nobody else is going to do it, and so they will do business with people they like and know and trust. And as you guys know, it's the same thing in real estate. You guys are doing those things. So that's just one of the marketing things that I do.
Yeah, it's funny. You could do a $50 gift card, and it doesn't mean the same as showing up with 6 cupcakes.
So something personal about that, right? Is in your guys' business, it's the same. You guys have got to be in front of your clients, and if you aren't, there's 70,000 other, I don't know if there's that many realtors. There's quite a bit of them in the state now. Somebody else will be, and they do business with you because they like, know, and trust you. And that's really what it is, and a lot of you guys have built incredible businesses based on those things. But it's also, you have to be intentional about it, know the costs that are involved in it. And in my case, it's a time thing too. It's like time is a cost. And I factor that into making decisions too. So next week, we're going to talk about PLLCs, tax deductions, S corporations. I'll do a little bit of cost segregation too, which you guys will probably be very interested in. My contact information, I don't know how I typoed that, but it's actually 480-200-2914. I did this last night. That was the problem. So it's 2914 is my my phone number. I'll change that here in a second. Instagram, you can follow me at Velasco MD. I think Kimberly, I think I'm running out of time here, but I wanted to open it up to any discussions, anything that I could perhaps maybe elaborate on more. And I'm not the there's lots of pieces of information out there. I'm by no means the expert on everything, but that's been my experience. And I think there are a lot of principles that will lead to a great life. And one of them is financial freedom. You want a miserable life, have financial chaos in your life. And so my passion is teaching this stuff, living in my own life. And then of course I get to work now. I get to do 1031 exchanges, deferring tax for pretty high net worth people usually. And so that's another great thing about my life is I get to do that every day. So
All right, anybody have any comments or questions, anything you want to add or ask?
I have a question. Do you have, does your company do the cost segregation studies?
No, but I've got 2 or 3 amazing cost seg companies that I could refer you to.
Okay, because I have one that's been doing it, but they're from California, so I just know if there's a
California
company here.
Yeah, and most of them are the same. If you're pulling 25%, usually that's the target number. 25% is a valuation of your of the assets. So the assets of $100 or I'm sorry, $1 million, 25%, you're going to get $250,000 in potential bonus depreciation through it. So if you're getting that, it's like, and they treat you timely. I've got a couple local. I have one out of the Midwest. It's fabulous too. He teaches a lot of the CPE events, but they're all doing the same thing as long as they give you customer service and they hit that number for you. That's about what the market is. Yeah.
Awesome. Anybody else? Thoughts, comments?
Yeah, I wanted to jump in. Michael, first of all, thank you so much. I thought that was a wealth of information. And I do get how you get glazed over with those numbers. But once you have your form built, you get excited to fill it out each month. So even when you have a bad month, you can compare it to the previous year, or it just actually helps you mentally. It makes you more confident. The more you do it, the more confident you get, and you get addicted to it.
Well, there's endorphins that get released through this process, and the endorphins of hitting your stuff on my I get like a huge endorphin release each month. I update my net worth sheet, and like if my stocks have gone up, and last year stocks have done great, as you guys know, but like every month I'm bumping it up X amount %, and you're like, this endorphin release gets going. And it's like money doesn't really make me happy in aspects, but it provides an amazing freedom for me to do what I want to do, which is exactly what I get to do every single day. But it is an endorphin release once you start doing it, on a regular basis. So,
well, and when you get out of the crosshairs, right? Like I think when we've all had to build back, there is a mammoth relief of like, okay, and like I'm not somebody's bullseye anymore. Like I have this freedom, and then you can start to make that shift. And I think, Heidi, to your point, it does become exciting because you're like, okay, now this was how low I was. I'm back here. And then now I'm just building to stay as far away as I can from that bottom spot. And I think there's a lot of freedom in that. Like you get to this place in your life and just go, oh, putting new tires on my car. Yeah, I hate to spend that money, but I'm not devastated thinking, well, crap, now I can't pay rent. I can't buy food. I can't buy gas. Like when you're not shaking all your furniture upside down to see if anybody's coins are going to fall out, right? Like when you have that kind of freedom, you're not in the crosshairs. And then it allows you to get to a place in your life, you guys, where you can dream and where you can like, oh, these are things I want to do. There's a lot of psychological benefits to not being under financial duress. And part of not being under financial duress is having a real life picture of what your finances are. And if we can't do that, then we're limiting ourselves from the life that we could lead. Not that I think everybody's designated to be a millionaire, but why not? I mean, and why not you? Right? So you can't do that if you're buried in the sand.
Well, I did want
And
to
the other
share
thing,
that I retired last year. I gave up a big salary, which made me very nervous because we do track our net worth. And so it's like, well, holy moly, I'm nervous about it. But now that I track it, I gave up a salary, and this year I ended up with more money than I started with without my salary, and we took money out. So tracking your net worth, once you start that momentum, it takes on a life of its own.
Yeah, it's good. It's really good.
back to Mike's initial comment about what he's grateful for is your health.
Yeah.
Having financial stress is the worst thing for your health. And
Yeah.
during the
it's terrible.
crash days, and I was very similar to Michael, except I went through Financial Peace University 3 times in a row because I'm a really slow learner. But I told myself through that whole time that I don't have any stress over this. This is just stuff. We just have to do it, just have to get past it. But when I got rid of all that debt and I became where I didn't have that, I realized then, like, I've been lying to myself this whole time. Having that financial stress on you, it was putting a toll on me and my family. And so that's, for me, that's the biggest part. Like, having money to go do stuff is great, but not having the stress that comes with not having it is the biggest game changer for me.
Yeah, that's good. Good share. Yeah. Well, you guys, awesome. Thank you so much, Michael. This was good content, really good information. For those of you that got something out of it, I would highly encourage you to invite people to come next week also, because we're going to get a little more gritty about specific strategies next week that will like everyone can take part in them. It's not something, you have to be in a special category to activate what he's going to share. It's every one of us. So thank you so much, Michael. Thank you guys so much. I hope you have a super duper happy week. I'll see your lovely faces next Monday, if not before. Bye, guys.
Thank
Thanks,
you.
Kimberly.
Thanks, you guys.